Hi, good morning, everyone. In fact, good afternoon, 6 minutes past noon it is. I'm Jharna Agarwal. I would be taking all your sessions for wealth management uh, session, this Young Wealth Managers Leader Program. I would request before we all begin, all of you as much as possible to keep your videos open because then it is, far more interactive for us also to see what you are absorbing and what you are understanding. So okay, ma'am, please mix Hindi and English both. Okay, most participants from North India. Great. ठीक है तो Hindi is also not a problem. So मैं चाहूंगी आप में से जितने ज्यादा लोग वीडियोस ऑन रख सकें रखिए, कम से कम थोड़े थोड़े टाइम के लिए तो वीडियोस ऑन रखिए. सो बिकॉज आपको देख करके मतलब देन ऐसा नहीं लगेगा कि एक ब्लैक स्क्रीन के लिए सेशन चल रहा है. ऐसा लगेगा कि हाँ ठीक है, देर आर लाइव पीपल आउट देयर जिनके लिए सेशन ऑन है. बाय थोड़ी आदत सी है, इट इज बाय नेचर दैट लॉट ऑफ इंग्लिश कीप्स कमिंग इन, but wherever you want you can always step in and आप बोलिए. I will repeat the same thing again in Hindi also, and I will try कि दोनों का एक अच्छा decent mix रहे. So just give me a sec. I will start with the presentation sharing. Is the screen visible to all? सबको स्क्रीन दिख रही है? Please, any one person can confirm. Okay, yes, great. Thank you for the confirmation. Great. ठीक है. So welcome to all of you for wealth management. During this entire session मैं बीच बीच में आपसे कुछ कुछ questions पूछती रहूंगी, and yes no वाले questions अगर हैं जो मैं पूछ रही हूँ तो आप for a second unmute करके yes no बोल के आप then you can mute again, and for maybe slightly longer questions you can raise the hands and I will pick you up from that and then ask questions. What is your view and your opinion? Instead of one-way traffic, we'll try that in this forum, kitna interactive we can make it. Okay, so my first question to all of you is: how many of you are already either working in a wealth management organization, or you have come across wealth managers, or you know somebody very close in your family whose wealth is being managed by a wealth manager? Okay, so Manoranjan is working with a wealth management firm. Megha, okay, you are also working with a wealth management firm. Others, quickly, quickly. There are 18 of you plus Aditya and me, so very quickly. Okay, I'm working in retail branch banking. Piyush Madan says he is. Kavita, I'm working in a wealth management firm. Okay. Others, yeah, it's a very simple, quick question. Please, Farafat, we will answer. Working with a wealth management firm. Vikas Jain says I have a business. Kumar Alan is saying yes. Vikas is saying yes. Okay. So that brings me to my next question. Especially for all those of you who are saying कि आप लोग already wealth management firm के साथ में काम कर रहे हैं. What is one key learning that you are looking forward to, because you have obviously gone through the sessions which are going to happen? So what is the one key thing which you are looking forward to, that ये एक specific चीज है जो at the end of this इस सेशन से मुझे सीखने को मिलेगी, जो वर्क प्लेस पे नहीं सिखाते हैं या अज्यूम कर लेते हैं कि आती होगी, और दे आर नॉट paying attention on it. Okay, I think what we can do is there are only 18 of us. आप लोग one by one unmute करके फटाफट बोल के mute then unmute कर सकते हैं. It will be better. हम सबको समझ में आएगा that in these 7 sessions, what is it that we are really trying to learn. And because this is the first session, I will have time to ensure that in the future sessions, even if it is not getting covered, वो कहीं ना कहीं किसी एक session में time निकाल के will touch upon it. Yeah, Jane, have I pronounced your name right? No. You're not audible, you're on mute. Let me check the settings.
Hello?
Yeah, I can hear you now.
Hi, ma'am. Good
Hi.
afternoon.
Good afternoon.
Deanne here.
Deanne. Okay,
Yes.
Great, Deanne. Tell me.
Yes. So basically, what I am personally looking forward to learn and gain from this session is a holistic understanding of wealth management. Because prior, at least to my understanding, wealth management is mainly centered around retail, HNIs, and our personal building right from when we start our career path right until retirement. So the fraternity that I currently am is within corporate. So it's not a wealth management, is more about managing cash or investments. So under the wealth, forte, we would like, at least I would like to understand how a planning is done, keeping several goals in mind or keeping the family's goals in mind while creating a plan.
Okay, done. So holistic view with a goal-based plan is what I'm taking in summary. Okay. Next, nobody else has raised the hand. Those of you who have put it in a chat, I think आप कर सकते हैं. Next person who had Manoranjan.
Hello.
Hello.
Yeah, am I audible?
Yes, you're audible.
Yeah, good afternoon, ma'am.
Good afternoon.
So I'm basically working with a bank and the wealth management, and we used to advise our clients on the wealth, on the mutual fund and all the things, mutual fund, PMS. So what we keep on doing is basically the postmortem of the market. That the market has behaved like this. So when the market falls or when the market raises, we always try to relate something. Okay. So what I can see from the past 18 months or past 20 months, you can see that GDP has not been going that well, and the market is in moving only one direction. And we keep on relating that FPI money is coming, domestic conditions have been improving. Okay. So what I have understood in my short span of career of around 6 to 7 in the wealth management, we always do postmortem of the market. That this has happened, that is where this has happened. Okay. Where the market will move. Okay. So if we can get equipped with some tool where we can probably come in 6 months or 1 year, rather than doing just a postmortem of the market, rather than just reading the market when it has already moved. Okay, I understand that this is a difficult thing, but that also with that particular tool, that would be the great thing.
So if I'm summarizing it as a tool to do postmortem of market before an event actually happens, before that down or before that rise actually happens. Is that
so that is not postmortem, that is not postmortem, that is predicting the market. Wow.
Correct.
Yes.
Yeah. ठीक है. Done. Okay, Manoranjan. Noted.
Thank you.
Yeah. Piyush, you can go next.
Hi, good morning. How are you?
I'm good. How are you?
Absolutely fine. So just like Deanne's stated that currently we are in that corporate treasury management kind of a role, and looking to understand more about the wealth management market per se, and also understanding the various product offerings which are there and the risk associated with them when we are going and sharing the same with the client. So a basic understanding on those lines.
Okay, understood. So different product offerings and the risks associated with each one of them,
Yeah.
and of course the suitability of each of those products
Yes,
for the
yes.
clients. Great, done, Piyush. Jasmine, you can go next.
Yeah, can you hear me now?
Yes.
Am I audible? Yeah,
Yes,
good
yeah.
afternoon.
Good
So
afternoon.
I'm just in the entry level position right now. So I'm just looking to learn how wealth management is done. I just want a practical approach to it, how diversification is done and how firms in reality they do it. Just want to get a practical approach to it.
Okay, done. So a practical approach, how to actually apply the different fundas theories which we learned, right? Great. So I think that's a very, very important point that all of you would have done, different courses throughout, but how to make this something which you can actually take back to your workplaces and apply for yourselves. That's that. Okay, great. Thank you so much for all of you for your inputs. Because really helps in making it. Aditya and I always discuss about how to make it far more relevant to each one of you. So with this background, I will go ahead and I will begin today's session. We will discuss a bit on what is and what is not wealth management process, so to say, some of those things, and why wealth management as an industry is like so important. Because when I did my MBA and I passed out in 2006, मेरा batch पहला batch था that wealth management as a subject was introduced. Okay, so my batch was the first batch. I think we didn't have a book because in India there were no write-ups on wealth management. It was only the foreign books which were there in the library because obviously they costed like 5,000 a book. So library would buy them and we would only get them issued. And my professor at that time, who was a visiting faculty, by listening to all his lectures, my understanding was wealth management is equals to art investment. And then in reality and practicality, I realized boss ऐसा बिल्कुल नहीं होता है. Okay, art investment hoti hai, but wealth management has, like, I would say in my entire career span from 2006 till now, less than 1% of the time has been spent on evaluating art funds, recommending art funds, and getting investment done in art funds. So, and now you find so many different courses on this. You find so many different people. So actually, when I had passed out in the entire country, there was only one organization with one wealth management department, that was Kotak. Kotak Wealth was the only thing that used to exist. And today you have each organization having wealth management vertical. You will have organizations having private wealth and wealth management. You'll have two different verticals and you will be like, एक ही organization है, दो verticals क्यों कर रखे हैं? So we will understand why this wealth management as an industry is a serious industry to look at. Okay, then we will look at that what it is all about and why it is important. So with that we begin. First of all, what's the concept? Accumulated savings which have been invested well, that is what results in wealth. Okay, and definition of who's wealthy and who should get wealth management advice is slightly relative, but the short answer is everyone. Need, it is everyone's need. Afford, who can, who cannot, is definitely a secondary question. Because right now, see, if it is a retail client, if it is somebody investing only 50,000, you can obviously not have a senior experienced 8-year tenured relationship manager to spend 2 hours each month with him. It's not economically viable for an organization. But then digital wealth management concept is coming in. So that is also there. So wealth management is actually in a way needed for everyone, but we are going to study wealth management as it is done, which is for HNIs and ultra HNIs. Now, this is an amazing graph. Okay. This graph shows that in the last 11 years, how has the individual wealth in rupee terms grown in India. This includes physical wealth plus financial assets, physical assets, which means real estate and gold included, and all the financials. What this excludes roughly is houses for self-occupation. Roughly, I'm saying because, because of the data, the definition is not very, very clear. How do you define which is self-occupied and which is not? So roughly, that is something which is excluded. And it includes a projection that given the way things are progressing, where it is supposed to go to. Now I have updated this graph very recently. I did not have the data point of previous years, but my older graph, which I used to use, was right from 1970s. And I will tell you that the graph from 1970s used to be like this. From 70s to 90s, like this, and then it would be an upward trend. And most of you would recollect, I hope even the younger ones, that 1990 was the year when India got liberalization. 1990 was the year when entrepreneurship started getting rewarded. Businesses could flourish. You did not have as much retipism as you did, and people actually started to prosper. With that also, that resulted in stock market growth, which was there. So it resulted into that also, and that was an inflection point. Because if you were to draw a graph, if I were to update it and show you by, say, next time from 1970 to get the data from somewhere, because the earlier data was in a fixed picture format that I had, that data you would see every year it hardly grew. And it is only after 1990 that the data actually took off from the x-axis and moved up. Okay, now what is the situation as of now? The latest report by Credit Suisse says that the wealth of individuals in India was at $12,833 billion, which, mind you, was a dip of 500 some odd billion dollars, because obviously last year did not do very well. Everybody did not do very well, and it is estimated to double in 4 years. So I come across a lot of relationship managers who say clients nahi hai, and I say, boss, data says there is a lot of clients and a lot of people needing out there. Okay, now out of the entire assets which we just saw, close to about only 56-57% is invested into financial investments. Look at the number of folio on the right side of your screen. That is the number of accounts or folios in millions. So there is only 624 million accounts versus what is the number of people in India? Life insurance policies, we have 253 life insurance policies. Folio numbers, mutual fund, this is slightly dated. The latest mutual fund folio number would have doubled, but even after doubling, it is not even 100 million. Equity, and when 100 million means the number of investors is very less. Because when I do my own personal investments, I have investments into 8 different equity mutual funds. So, which means you can automatically assume if everybody is doing on an average even 5, you only have 20 million people probably investing into it. Then the equity folios which are there and the corporate deposit folios. So which are there. Out of the total household financial wealth, only 3.5 trillion is in mutual funds. Again, like I had said, the mutual fund data here is slightly dated because the report was on a calendar year basis. Okay, this is Kavita, you are asking, this is as on last year by via Credit Suisse. They do the calendar year basis. So I would be very shortly updating this when the data for the previous years are there. I would be updating it from that, because some data, latest data was available in Credit Suisse. And India, the data as on 31st March 21, it takes some time. It takes close to about 5 to 6 months post that for the data to actually come out and get released. So that is there. And only 8% of household investments are invested into equities or mutual funds. Now, you would recollect last year in November, December, I mean, if you were following that, there was a news which said that, India has grown, it has grown to that much. But we have to remember that report gave a 11% kind of a number, but that they assumed of the overall financial wealth. We are here talking about the entire wealth, which means all the gold and physical estate investments also that is there. So as experience in other developed and mature emerging markets, we are expecting that this is going to go in a much more sophisticated manner. And investments will slowly move into sophisticated investment products. Like to quote, the first time that I had collated this data was in 2012, and at that point of time this 8% participation was only 4%, and at that point of time financial products used to have a participation of somewhere close to only about 47-50%. Now already a 10% shift has happened, and we are slowly seeing that this is something which is going to go on rising trend. It is a sunrise industry, also goes by the fact that number of families with wealth above rupees 10 crores is estimated to be 2 lakh. Guys, I do not believe this particular statement in line in data, because in India we know that the declared number and actual number is very, very different. So this particular data, also to give you a sense, used to be somewhere close to about 5 crores wealth, above 5 crores for 2 lakh families in 2012 is what the data used to be like. Now we don't track 5 crores, now we track to 10 crores for the ultra HNI criteria. So the criteria has also changed. It used to be 5 crores at a point of time, and it is 10 crores now. Number of family with investable surpluses of 50 lakh, annual investable surplus of 50 lakh is estimated to be about 3 million. That is, that every year there are about 30 lakh households in India who generate 50 lakh of additional. So after what they have earned, from that all their expenses gone, and they have 50 lakh additional money to invest every year. Okay, India accounts for 1% of world millionaires today, and this is expected that by 2025 we will have a 1.3 million. Okay, which means we are saying that 13 lakh, and this is going to be in dollar terms. So we are saying by 2025 there will be 70, assuming today's let's say at that point of time the conversion rate would be say 80 at that point of time. So we are saying that at that point of time there will be 13 lakh people in India who would have wealth of 8 crores or more. So as of now, at the family level, we are doing this 2 lakh. This is from a different report source. But yeah, the financial investments level by 2025, it's expected to go up by that much. Obviously, the main reason is that, like in Hindi हम बोलते हैं कि पैसा पैसा खींचता है, तो पैसा पैसा खींचता है, it is कि आज जिसने मार्केट में पैसे डाले हैं एंड इक्विटी मार्केट्स में थ्रू डायरेक्ट इक्विटी, म्यूचुअल फंड, पीएमएस जो कंपाउंड होने वाला है, obviously they are the ones who are going to grow more. Okay, most of the wealth in India is still held in FDs. Pure bank FDs still account for more than 23-24% of the assets. So still that much money goes there, followed by the post office deposits that they do, Kisan Vikas Patra, NSC, all of those cumulative, all of that still accounts for somewhere close to 30% plus of the financial assets which is there. And equity penetration is obviously very low in Indian markets. And when I'm talking about wealth management, why is it important to discuss equity participation? Because that is the only, probably one of the only asset class which actually exceeds the inflation. And we will discuss these concepts going forward, that when can you actually say that you've increased your client's money. Okay, if your client's money goes from 1 lakh to 1,10,000, can I say that I've increased client's money? We will see whether can we say that or whether can we not say that. Okay, now this is a structure of the services, this particular space, the industry that we are in. So it is always prudent to understand lay of the land where you want to venture into. So if you already are, you would be aware about it. For those of you who are into treasury or slightly different fields, this is how Indian financial services is spaced on the investments side of it. So you have retails, including HNI and institutional. So these are institutionals, are your institutional broking, equities, investment banking, and corporate finance. Then retail is consumer banks and stock broking companies. So the retail ones could have a wealth management vertical with them. Then you have banking and non-banking. So in non-banking is everybody except banks, which is could be your private sector units also. It could be individuals. It could be like my organization, which is Anand Rathi Preferred. So these NBFCs which are there, or the foreign banks who have come to India, each one of them could have be there into the wealth management. Manufacturing and distribution may division here. So manufacturing is all your insurance companies, all your AMCs, which are your mutual fund companies, PMS, structured products. These are all product manufacturers. What do they manufacture? Our next two sessions is what we will cover on that. Distribution is being done by here. Can you see my cursor here? Retail and the non-banking units via banks, stockbroking led distribution, wealth, pure play distributors. What is the pure play distributors? It's just something like say NJ, who are not into equity broking and they are purely onto distribution. Okay, and sales or finance, finance related jobs are your equity research, quant analysis, product research kind of a job. Sales, all other jobs in the world. And in fact, if you ask me, including these jobs in the world. Okay, because after 15-16 years of work experience, the only thing that I've understood it that each and every person in an organization is a salesperson. Even the back office support service person is a salesperson. What are they selling or how are they enabling the sales? It's just that differs. So this is to understand the entire wealth management scenario which exists. Okay, very important for all of you if you're looking to make a career in wealth management, that you should know the advantages, disadvantages of different kind of organizations, and then you should be able to know that what is your own strength, and hence what kind of an organization should you be targeting to be your next career destination. Kind of a thing. So herein on this side axis, the vertical, we have said pure play distribution to planning, advice, and execution. Okay, so the bottommost says only where distribution is the key. The topmost is where advice and execution support is also done. Sorry, pardon me. I have been traveling for the last 3 days. Even today, I'm in Bangalore, not in Mumbai. So pardon that. Then here on this side, we have equity only products, equity mutual fund, insurance, and all relevant products. Okay. So now let us understand these squares. Okay, which are there. So don't focus on the 6 squares. The 6 squares don't really have a relevance. They're more like a grid line, just to give you the midpoint. And in this, the three sections, broad sections that is there. Okay, so first of all, we will cover these trading portals. Provide platform for trading, investment advice, automated and elementary at best. Now I want you guys to think through, think of the industry, scan it, and tell me, what do you think classifies in this trading portal? Which company or brand do you think can come there? Quickly, just put it on the chat or raise your hand. I will unmute you. Anything is good with me. Zerodha, excellent. Many is a brand. I'm not aware. Sher Khan, to an extent. Upstock, very much. Great. So grow Kotak Securities. No, Jasmine, not really. I will come to that. Why? Okay. iDirect, yes. ICICI Securities, no. So iDirect is a right answer, but all of us immediately link it with ICICI Securities. ICICI Securities will be no. Grow, okay. HDFC Securities, not really, Kavita. Okay, great. So IIFL, absolutely no, Kumaran Balan. We will come to that. Okay. So Paytm, yes, absolutely. Great. So now we get some ideas. So if you guys see, I said I give a big thumbs up to Zerodha as the right answer, Paytm and Grow as platforms. Their purpose is to just have a great, excellent portal for you to enable the things. Okay, there are so many young executives, even people from friends, family, who refer. Once I had this some, कोई बहुत ही दूर का cousin था, किसी का something 3-4 families removed, and saw an article of mine in the newspaper. It clicked, अरे ये तो हमारे रिश्ते में लगते हैं, and called up कि एडवाइस चाहिए, मैंने जीरोधा पे अकाउंट खोला है and I want to do, and I was like, boss, can't advise on it because नहीं सॉरी, कन्वर्सेशन लाइक ये सब मुझे करना है, मैंने आइडेंटिफाई कर लिया, मुझे जीरोधा के थ्रू करना है. आई सेड एक्सीलेंट, करना है जीरोधा के थ्रू तो आप कीजिए, नहीं आप एडवाइस कीजिए. एंड आई वाज लाइक, कांट इट हैपन, एंड बी वेरी क्लियर. आई सेड अगर आपको एडवाइस की जरूरत है तो जीरोधा आपके लिए राइट प्लेटफॉर्म नहीं है. Zerodha is the right platform for those people who have the time, the skill to Google, read, study, analyze, research, and take their calls, and then go ahead and transact. Zerodha does not give you a reco or a product basket or something and say ki you invest here and this is how it will grow. Oh, your risk profile is like this, you do this. They're very, very clear. They will have research reports and all, but they are all information driven, nothing which will guide you for a decision making. So if you are looking to get an advice, these trading portals are not the right answer. Why it is important? Those of you, many of you who said you're already working with wealth management firms, in today's time, these kind of firms tend to be a relatively big competition. But if आपको क्लैरिटी है कि आप क्या ऑफर कर रहे हो क्लाइंट को, तो आपको ये पता होना चाहिए कि इन वेल्थ मैनेजमेंट दीज ट्रेडिंग पोर्टल्स आर नो कंपटीशन. ये ट्रेडिंग पोर्टल्स आपके कॉम्पिटिटर्स हैं ही नहीं, because these trading portals can only do efficient transaction and nothing else. So when a RM in my organization comes to me and says, अरे मेरा वो client है, वो जीरोधा पे करना चाहता है, बहुत कम फीस है, this and that and all, तो मैंने, my point to him is, अरे भैया तुम कॉम्पिटिटर का बात करो, जीरोधा कॉम्पिटिटर नहीं है. And one point I would like to make here is very, very important. Remember two things. आप जब भी किसी client से बात करते हैं, there are so many clients who are so obsessed with A, charges, B, taxes. Correct? How many of you are into client facing, आप में से कितने लोग हैं जो client interaction roles में हैं, and have you faced this thing? क्लाइंट को यही यही एकदम की पॉइंट लगा रहता है, चार्ज कितना लगेगा और टैक्सेस कितने लगेंगे। आपके हिसाब से ये बहुत इंपॉर्टेंट पॉइंट्स हैं? मेरे हिसाब से ये बहुत ही कम इंपॉर्टेंट पॉइंट्स हैं। आई एम नॉट सेइंग इंपॉर्टेंट नहीं है, बट बहुत ही कम इंपॉर्टेंट पॉइंट है। क्यों? पहला पॉइंट, यार अगर प्रॉफिट ही नहीं बना तो टैक्स किस पे दोगे? क्लाइंट इन्वेस्टेड 50 लाख रुपीज एंड 50 लाख का सिर्फ 51 ही हुआ, तो 1 लाख पर यार क्या टेंशन लेनी है कि आप 10% टैक्स दोगे कि 15% दोगे या 20% दोगे? मजा तो तब है ना जब 50 लाख आपका 60 लाख बन गया और आपको 10 लाख पे टैक्स देना है। सो टैक्स सेविंग शुड बी टॉप प्रायोरिटी, या इन पोर्टफोलियो ग्रोथ शुड बी टॉप प्रायोरिटी? मेरा 50 लाख का 51 लाख हो गया, इन्वेस्टमेंट ऑप्शन ऐसा था जिसमें 0 टैक्स देना था, तो मेरे हाथ में 51 लाख आया, और मेरा 50 लाख पे 20% ग्रो होकर 60 लाख बन गया, 10 लाख का प्रॉफिट था, मैंने 30% टैक्स दिया, तो मेरे हाथ में कितना आया? 57, because tax is not paid on the entire 60 lakh, tax is paid only on the 10 lakh which you earned. And similarly for charges, अच्छा फंड मैनेजर चाहिए आपका, उसको क्वालिटी काम चाहिए, उसके पास में एक बढ़िया सपोर्ट टीम होनी चाहिए, एफिशिएंट एग्जीक्यूशन होनी चाहिए, तो मैनेजमेंट फीस भी लगता है। That is also something which is a part and parcel of it, otherwise you are not able to do it. Okay, so here now coming to this particular matrix, these are the trading portals. Then we come to the retail banks. Now if you see, retail banks जो हैं, they are in the middle section. वो सिर्फ equity only नहीं offer कर रहे हैं, वो और products offer कर रहे हैं. They have mutual funds, insurance and everything. Okay, now trading portals also offer mutual funds also, so that is there. And आप देखो इसको नीचे बॉटम पे नहीं रखा है, इसको थोड़ा बीच में रखा है. They offer okay, Vikas, young software engineers shift to grow and Zerodha. If at the end we have time left, आप एक बार ये क्वेश्चन दोबारा पूछिएगा. I will give you an appropriate answer to convert those clients. ठीक है. रिटेल बैंक्स जो हैं वो थोड़ा ऊपर है, दैट इज वहां पर आपको थोड़ी बहुत गाइडेंस मिलती है, आरएमआई को बोलता है ये करिए ये मत करिए, काइंड ऑफ अ थिंग. देन ब्रोकरेज हाउसेस जो हैं आपके, ओके, उनके जो ट्रेडिशनल यूनिट्स हैं ब्रोकरेज हाउसेस के, लाइक आनंद राठी में देयर इज आनंद राठी शेयर्स इन स्टॉक ब्रोकिंग वर्टिकल विच इज द ट्रेडिशनल हाउस. वो लोग आपके प्लानिंग एडवाइस एंड एग्जीक्यूशन करते हैं. सो देयर इन इट्स लाइक द डिफरेंस इज आप ज्यादा ब्रोकरेज देके एक डीलर के थ्रू डायरेक्ट स्टॉक्स का बाय सेल करेंगे या आप जीरोधा पे करेंगे. अगर आप खुद डिसाइड नहीं कर सकते व्हाट टू बाय, व्हेन टू बाय, एट व्हाट प्राइस टू बाय, व्हेन टू सेल, मोर इंपॉर्टेंट, direct equity more than buying, when to sell is most important. Buy decisions I have seen most of the time is correct. The wrong decision is the selling, either by way of not selling or selling it too soon. Okay, so therein you have dealers. Instead of 0 at Zerodha, you pay 30 paisa brokerage, but then the dealer tells you what to buy, when to sell, how much profit is good profit on that stock. Okay, then you have these private banks and larger wealth management companies, and that is the space in which your wealth management actually happens, wherein all your plans are there and you get a very high quality advice. So we will be sharing these presentations also with all of you, and you will be able to go through this metrics. One study of this particular slide will give you a very good and very clear idea of this entire industry space which is there, and you would also know that in future, out of these different kind of organizations, where do you want to make your career. Now remember one point, I am saying organizations, but each organization today has different departments who are playing one of these roles. Okay, so Kotak being one example, Kotak Securities, HDFC Securities, whoever said, ICICI Direct is the trading portal, ICICI Securities is the brokerage house which is there. Then within ICICI Securities, they have a wealth management vertical. And they have a private wealth. They name both of them slightly different. So they have those verticals. So you now should know, you should ask before joining, what vertical are you? Don't go by ki ICICI Securities hai. Get that clarity and then progress forward. Okay. Now a typical wealth management firm, this is how its organization usually is. This is not necessary that each organization will have this, but a complete full-fledged services organization will be like this. They will have a HNI vertical, which will be a 1 to 5 crore vertical, ultra HNI business solutions, which will be a 5 to 100 crore, PCG equity, which is high value equity broking, that will be 5 crore plus, family offices, ultra HNI families, which will be 100 crore plus, and then you will have a separate section for NRIs. Then you would have these parallels, product and solutions, which is catering to all. So I currently am heading product function for preferred, which is the wealth management vertical for Anand Rathi. Then there will be this marketing vertical, which will be doing brand management, brand development, customer profiling and everything. You will have HR and training, and then obviously very important today, which is IT, the information technology, which is there. So this is how the in technology and operations, this is how a typical wealth management firm layout is. Okay, so now that we have understood wealth, the entire industry structure and the company structure, now we come to why of such a formal, decent wealth management process do we really need it. Okay, so this is how a single kitty approach works. Single kitty approach means that I have not done any kind of, so to say, planning. Okay, I'm not doing goal-based planning, talking about a goal-based planning here. I'm just saying an overall planning. I just keep investing. I have one mutual fund online account with, say, Anand Rathi. I just keep investing through it. My money keeps growing. Okay, so in that approach, what happens here? Let me use this. Okay, I can't find it right now. I thought I will find that laser option which is there and use it, but I can't seem to locate it currently. No, okay, forget it. Okay, you guys can see this arrow cursor of mine, right? ये cursor दिख रहा है आपको? Any one of you can reply? Yes, okay. So you will know what I'm highlighting. Great, works. So single kitty approach में, okay, single kitty approach में what happens? आप यहाँ से चालू करते हैं, आपने पहले साल में इतना पैसा बनाया, वो ग्रो किया, आप धीरे धीरे ऐड कर रहे हो, उसके अंदर में पैसा भी ग्रो हो रहा है, आप भी ऐड कर रहे हो, फिर थोड़ा ग्रोथ आया, आपका पहला गोल आया लाइफ का, वॉट एवर दैट गोल इज, ओके, आपने वहां पे पैसे खर्च किए और वो सीधे वहां से इतना गिर गया, इतना अमाउंट था, ये जो इतना अमाउंट था वो आपने वहां पे यूज किया था, फिर आप वो धीरे धीरे किए, फिर वो डप करके यहाँ पे नीचे गिर गया. So this is how the single kitty approach works. This is how goal based investment works. कि ये आपका पहला गोल है, आइडेंटिफाइड है कि इस पूरे में से इतना पैसा इसका, ये यहाँ जाके जीरो हो जाएगा, देयर इज नो टेंशन. गोल 2 जो है वो उसका इतना है, ये इतना रहेगा, और बाकी ये जो है ये आपका वेल्थ बिल्डर है. That this is not really like a financial planning, because one question which I get a lot is what is the difference between financial planning and wealth management? How many of you get that question in mind? Raise your hands. You can raise the hand here. What is the difference between financial planning and wealth management? दोनों एक ही होता है ना, difference क्या है? Charanjit is saying me, he also gets this question in mind. Great. So I don't have a slide on it. I will just take a minute to cover it at this point of time, because the minute I start talking on this slide, वो question सबके mind में आता है. Okay, which is there. So wealth management is for people who have sufficient amount of wealth. What I mean by that is, अगर वो कोई planning नहीं भी करेंगे ना, तो जुगाड़ करके सब करके हो जाएगा, लाइफ सॉर्टेड है फॉर देम. Financial planning is wherein you are into that early phase of your life, wherein you do not have enough income, wherein you need to plan that, okay, as of today I can do a SIP of only 39,000, and that is not enough to take care of my child's future expenses, my retirement, child's marriage, etc. So you do a complete base planning that 39,000 I'm doing right now. Then next year when hike will happen, I will increase my SIP by this much. That is how it will happen, and that is how I will keep on growing it, and that is what it will happen. Okay. Financial plan. Second is financial planning focuses a lot on your income and expenses. Your wealth manager will never, as a part of the process, ask you what is your income and what is your expense. He is not concerned with that. He is simply going to say, what's the total net worth that you have? What is the financial asset net worth today? How much more money on an average every year can you add to it? And with that, how much can I grow this money? He will only take into account that, okay, in which years are you going to withdraw money? So I say, 7 years down the line, when my daughter's education, if it's US education, I will be withdrawing, say, 1.5 crore. Then at the, say for her marriage, I'm going to withdraw this crores. He is not going to plan to get to that amount, how much I should invest every year. He is looking at, I am going to invest it 4 crores today, and every year I commit, I will add at least 20-25 lakh more capital to this. So his planning is this, that okay, this will all grow in that particular year. She will withdraw, Jharna as a client will withdraw this much. She'll keep on adding this. This is how it is going to grow. Then she will withdraw this much. And then after that, for her retirement, approximately this is there. So this is the level of lifestyle that she can maintain. Okay. So that is what we do. Then personal financial, it revolves around day-to-day expense. I will tell you, we had done a financial planning for a client in Bangalore, and he was a pretty good paying executive. He was a project lead in an IT firm, and he thought he was doing very well and fine. And then we told him, sir, आपके जितने लाइफ के गोल्स हैं, जो आपका लाइफस्टाइल मेंटेन करना है, with your current income, we are sorry, but it can't happen. The guy said, really, but I thought I was doing fine and I thought I was doing good. We said, nahi sir, nahi hoega. It is not going to set nahi ho raha hai pura amount. ये possible नहीं हो पाएगा. Future में आप job change करेंगे तो कुछ वो होएगा. He was like, okay. He said 1.5 महीने बाद मिलते हैं, 1.5 से 2 महीने बाद मिलते हैं. He postponed for another 15 days. The RN थोड़ी तो गया. Then the guy called, सुनो जॉब चेंज हो गया है, फाइनली पैकेज 35% बढ़ गया है, अब पूरा एडिशनल अमाउंट एसआईपी में जाएगा, आओ लेट्स मेक द फाइनेंशियल प्लान अगेन. सो financial planning is for people who are at that stage of life. Wealth is where the money is already accumulated. You are not solving in wealth management, you are not solving for कि उसके डे टू डे लाइफ एक्सपेंसेस कहाँ से आएंगे. Your client is already at that level. रोटी कपड़ा मकान are not his problems. When you're talking, even when I'm talking about his retirement life and all and everything, it is all about saying what style, what level of, what quality of life will he be able to lead. Okay, so there are no annuity PMT calculations which come into it. Maximizing clients' returns while sticking to his or her risk profile is what wealth management is. I hope I have adequately answered it. If Jasmine and Pew, one more person who had raised hand, Manoranjan, if अगर शैव्या मनोरंजन, अगर आपको अभी भी इसमें कुछ क्वेश्चन है तो you can unmute or you can put it in chat folder. But very clearly, wealth management is not about roti kapda makan ki management. It is about growing and increasing, have the capability to increase your client's lifestyle. Okay. So here, this is what happens. See, goal one कम time period में कम होने वाला है. So that much amount that the client is going to withdraw at that point of time, I would put it into low risk. Then goal 2, moderate risk, and goal 3 will be an aggressive risk. And the overall composite, a weighted average of all of these will end up defining the overall risk allocation, which we will do for the client. Okay. A trusted advisor requires holistic approach. Please excuse the colors and all. They're very old. I had made it in an older version of PPT, and I just don't know how to change these colors to suit all these new PPT ones. That is not really my expertise area. So which is there. So customer handles his own capital management, and various intermediaries serve the purpose of his wealth management. This is how it used to happen earlier, right? In our parents' time, in our grandparents' time, उनको पता था कितना पैसा है, वो decide करेंगे. PM, there would be in I think almost all family, lot of families where if you've been staying in one location for like ages, you would always have that one trusted LIC वाले uncle जो आते हैं और आकर के, and especially family में हर time जब एक new baby होता है तब वो आते हैं और वो हर उस एक न्यू बेबी के नाम की वो एक अंकल पॉलिसी लेके जाते हैं. He is invited to all major family functions also, almost a family member part kind of a thing, and you know, sort of a very permanent fixture, like Suraj Bajate movies, part of extended family types kind of a thing. Okay, but those of you who your questions, queries are answered, you please lower your hand after that. Okay, great, thank you. Okay, now in this new format, what happens? There is a trusted financial advisor who is doing all the roles. So this wealth advisor, this wealth manager, he will tell you म्यूचुअल फंड्स में क्या करना है आपको, इंश्योरेंस में क्या करना है आपको, एंड डिफरेंट प्रोडक्ट्स में क्या करना है आपको. आपको स्ट्रक्चर्ड प्रोडक्ट जैसे एक्सोटिक प्रोडक्ट चाहिए कि नहीं चाहिए, AIF करना है कि नहीं करना है. All of this information is something which this one particular person will be guiding you. So this is the value add which the wealth manager brings to the client. Okay. Broad classes of wealth. First is the consumption assets. So let's be very clear, this should never be part of your net worth. You want to feel good and make it a part of a net worth. You means as in the client wants to feel good and make it a part of net worth. Great for him, but not so great because he will get a very skewed view. It's like this, say I stay in Mumbai, there a client staying on Nepean Sea Road in a 20 crore flat and saying my net worth is 20 crore. The question is, would you ever want to sell this flat? Move downtown to say Andheri, buy a flat for 7 crores and utilize these 13 crores for your expenses? It will be such a down market act for him to do, you know, moving from suburb to suburbs, not happening at all. So वो नहीं होएगा. Like most of you आप लोग दिल्ली साइड से हैं, it's like saying साउथ दिल्ली वाले को बोलो कि जाकर के वो क्या है शाहदरा में रह जाए, kind of a thing. तो वो नहीं होने वाला. कविता is laughing. I think कविता is from Delhi NCR. She understands that. हाँ, आएगा क्या साउथ दिल्ली का साकेत का बंदा शादरा में रहने को? कविता नहीं आएगा ना? Right. So see, this is what it is all about. Like in Bangalore, it's like saying कि आप डॉलर कॉलोनी से शिफ्ट हो जाओ आप सरजापुर में, kind of a thing. So all of these things. So what is the point? वो कितना भी करोड़ का वो फ्लैट है आपका, कि बंगलो है, कितने भी उसका है, it is not, it is a consumption. The gold that you wear is a consumption. Yeah, in extreme distress, you would look at selling it. But do you really want to sell it? आप एक्चुअली में क्या आपका लेवल उतना काउंट करना चाहते हैं? Nobody wants to do that. Okay. Liquidity and contingency reserves. We all know this, that something should be there into the bank account and liquid funds to take care of any low cost transactions in anything. So as a wealth manager, how is this important in wealth management? How are you going to approach these? Because in सबकी management तो financial planning में, goal planning में होती है. What we tell our clients is both consumption assets, मेरे हिसाब से तो assets है ही नहीं, net worth से कम करो. Then I would say these contingency assets, this is something that, okay, bank account is giving this much, I will give you a good liquid fund, but they're not really again a part of your net worth management. As it is, contingency should be limited. It should not be too much. I had a client who from he was setting up a new business for which he had liquidated assets. And Jan last year it became Jan Feb last year it became clear to him that in the new business ये 1 crore रुपया तो नहीं चाहिएगा. And since then I had been telling him to invest the money, and the guy did not do it because the Corona COVID आ गया. And he was like, see, I have old age parents and this, that, blah, blah, blah. Tomorrow I have calculated that if my parents are in an extreme critical situation and from Ranchi, if I have to airlift them to Delhi, and then the expense in Delhi, मेरा 1 crore तो लग जाएगा. By God's grace, his parents are fine. He is fine. And in this last 1 year, his 1 crore has not got him anything. And we were discussing doing this investments from March till August time. Needless to say, if you would have done it, you would have been at 2 crores right now. Even if something would have happened in the second wave, his 1 crore would have been 1.8 crores. He could have easily afforded a far more better quality treatment, airlifting and everything. So there is something good with being cautious, and there is something really not very great with being that over cautious and unnecessarily eroding your net worth value. Then these are the milestone capitals, wherein they are meant for specific goals, wherein we say, okay, this is the amount which is going to go there. So a lot of time I have in fact sometimes seen clients, what they do is they would open in their own kid's name only, although the earnings would be attached with them, but they have that clarity. They're like, okay, this is for that purpose, this is for my purpose, kind of a thing. So this will be the milestone capital. And then the last but most important is the wealth builder capital. Wealth builder capital is actually what takes a family from a level to another level. Okay, there is no target corpus here. Like I said, ऐसा नहीं है कि हमको कोई retirement planning इधर करना है. It is to say that it should always grow by this much. How much should it grow by? I will discuss that at the end. Okay, so different type of capitals should be invested into different type of asset classes. Okay, so it is driven by use of capital. Asset classes is holding patterns. Types of capital is determined by customer context. Asset class is determined by market conditions. Type of capital is a given type can choose from different asset classes. A given asset class can be suitable to different type of capital, which means if your milestone is longer, equity can be used for milestone as well as wealth builder. Classification differs by mental class categorization by customer. Like I said, some customers do that. They invest into the kid's name only so that it's clear that it's meant for them. And classification differs by risk return profile. So a lot of clients get a bit confused in when I say this is the type of your capital, this is your contingency capital versus the asset classes which are. Okay, level 1 classification in capital management and level 2 classification in capital management. I would like to go back to the slide here. So this is the level 1 classification and this is the level 2 classification. So pictorially I have done this. I hope, is this point clear to all of you? Okay. In case not clear, please just drop a query in the chat window. Okay. So now coming to, we read that this, we saw that capital and asset class. Now we will see what type of asset classes suit what type of capital. Okay, so consumption assets most commonly used, these are all self-occupied homes, jewelries, cars. There is no specific asset class which you are mentioning there. Okay, liquidity and contingency reserve, bank account for liquidity, short-term debt fund for contingency. If contingency requirement is too small, bank account can be preferable to short-term debt. Milestone capital, debt funds for nearer milestones, diversified equity funds, index funds for further goals, PPF and EPF, debt funds, all of these are things which you can consider. Potentially useful reality investments for specific real estate driven milestone goals. So let's say I want to buy a house, a holiday home, couple of years down the line. I don't know how much real estate prices will grow or not grow in during this point of time. I could go ahead and invest into a real estate AIF, because today it is not very clear to me ki holiday home, where do I want to buy, whether I want that holiday home to be in say Lonavala, or I want it to be a beachside kind of a thing in Alibag. I am not really decided on that. So what I could do is I could invest into a reality fund wherein I know that the money will grow as much as the real estate is growing. So most likely whatever I'm planning to buy would still be well within my budgets, even after 5-6 years of time when I've made my decision. Okay, gold investments for related milestones. How many of you think of gold as an investment option? How many of you buy gold for investments? Jasmine does. Anybody else? SGB, Manoranjan, excellent. Through DigiGold, great. Guys, 1 second. Pani. Yeah, thank you. Okay. Sheva, it's a hedge. Really, is it a hedge? Piyush, no. REIT is also a type of reality investment. Absolutely, Aman. We will cover it when we do the asset classes and products. Okay, great. So, guys, gold should be present in everybody's portfolio. Okay, the short answer is it should be present in everybody's portfolio. Agreed, it is a hedge, but it's a very important, and it is a very important hedge. So each one of us should have investment into gold at some or other point, at all points of time. We may begin with just 5% allocation. We may begin with just 5% allocation, and then slowly over a period of time, basis the stage of wealth building that we are in, we would actually take it up to 10%. Very few wealth managers suggest this to their clients, because giving gold products to the client does not lead to any revenue, much revenue for the banks or the distribution houses or for wealth management industry, and hence it is mostly not spoken about. But it's always a great idea to tell your clients what they really need, because even if you allocate 5% of clients money to gold, client will appreciate that you're giving the right advice to him or her, and would be happy to give you more money for rest of the products, which will actually lead to the revenue generation which each one of us is supposed to do for our organizations. Then wealth builder capital, and this gets very, very interesting. Sorry, I missed one milestone, which is international investments. So if clients have this aspiration that, my daughter or my son should go out abroad to US and then invest. So I still remember, this was year 2018. 2018 in Delhi, I was doing a client event for my Delhi branch, and there were these two clients and who were like, झरना किसी तरह बस ये ना रुपी को ना 68 पे हमारे लिए फ्रीज करा दो, बाकी सब ठीक है, किसी तरह से कुछ तो प्रोडक्ट निकालो, किसी तरह से रुपी को हमारे लिए बस 68 पे फ्रीज करा दो. Why? Because they were looking at it this only, that they want to send their kids to abroad, but they were like कि annual increase of US lifestyle, annual increase of US colleges was not going to kill them. It was rupee depreciation which was going to kill them. Okay, so that is something which was there. So then the answer was this only, that so we can't do that because the rollover cost, even if we take contracts for you, the time period is so long, the rollover cost will be so much that it will end up becoming an equivalent cost for you. So the best option is that today only you remit money outside India, open an account there, investment account there, invest in today's terms, and it's okay. That money will not grow at the Indian growth rate, it will grow at US growth rate. हालांकि तब से अब तक में US markets have given as great a return as it could be, right? So invest into that, and then sir, you withdraw money from there and pay for the college fees and everything, and the rupee depreciation will not hurt you and pinch you. And they really liked that idea and went ahead with that. So what we are saying is that in milestone, it depending upon the kind of goal that you have, you may specifically choose a particular type of asset class to play it. Okay, and in wealth builder, it's an amazing open space wherein the maximum innovation and flexibility of products is what that comes into it. Any questions here? Products in detail, next two sessions we will go through that, but prima facie, any questions here on this slide? Yeah, Diane. Yeah, you are on mute now.
Okay, hi. Okay, so I wanted to understand that in Milestone Capital, we have identified that diversified equity funds or debt funds. So then again, in this Milestone Capital, the age and the career path of the individual will be ascertained from, right? For example, if we are doing a Milestone Capital for someone who's 45 plus, then that metrics will completely be different. And if it's a wealth builder for any of these new promoters or startups, for example, so a lot of money has been flowing to startups, and there are a lot of billionaires or millionaires who have been formed overnight, and they may be just 2025 today. So accordingly, I wanted to understand that how different would that planning be?
Very. So as a wealth manager, what you and I need to understand clearly is what are each of the asset classes, what is their basic nature and behavior. Okay, what are the advantages, disadvantages of different products available within that particular asset class. Okay. And then when the client says, this is the money meant for this specific thing, you would know what asset class to pick and what to do. For example, the example that you took, say, there's a startup guy, PE fund came and invested. He has got a cash out of it, of 26-year-old guy got a cash out of say 15 crores in hand. Rest of the investment is into the firm. So 15 crores, how would this be invested? This guy says 5 crores, so I am going to do one more new startup. And I will start that in about any time in 1 to 1.5 years. Prototype is on. Okay. Rest 10 crores is for my lifetime safety. That if both of these tank in future, that money should take care of me through life. Okay. So his 10 crore portfolio, you would put that into a wealth builder portfolio wherein time horizon is not the limitation. You would do a risk assessment roughly of his, and accordingly you will invest to maximize the returns. Because the assumption is this guy is never in his life going to touch it. Okay. The 5 crore which he says that in 1.5 year, I may need to withdraw. Then you're going to go about it like this. That I can't invest into any product which has a lock-in. That's the first foremost criteria. Then in asset classes terms, equity is definitely out because he could end up being negative also. And herein for this money, see, he has not asked you to maximize the returns. Idea of giving you this money would simply be कि savings account से कुछ better दे देना for this 1.5 crore. So therein, then what you would do, you would naturally tend to gravitate towards some bonds. The best idea, because today we are in a rate increasing cycle, the best idea would be to give bonds which sort of coincide with his exit time. The maturity coincides with that. So if he estimates that he will need the money after a year, you will not give him any bond which has a maturity of more than 18 months. So that even if the rate hike happens, mark to market losses will not be there. If some of you are not able to understand what I just said in terms of mark to market losses in bonds, mein losses kaise hoenge, we will be covering that in detail in the coming weekend. Coming weekend will be all about understanding the asset class and the products. And I would say if you end up skipping any session throughout this entire course, it will be okay, but do not mix the 2 sessions we will have on the coming weekend, because those are very two crucial backbones of the entire wealth management process. Okay, so this is how your approach, Diane, is going to be different for both of these portfolios. So even for the same, what I'm saying is even for the same client, you could be making 2 different portfolios. Okay, so this is another representation of same, wherein we are saying whatever we saw in the previous slide, this is just a simple representation of it. Why not NPS include in wealth builder capital? यार अपने वेल्थ मैनेजमेंट क्लाइंट का आप जब 5 करोड़ का पोर्टफोलियो बना रहे हो, 50,000 is what percent of 5 crore? Somebody who is investing fresh capital of 25 lakh every month, year, what is 50,000 percentage of? It's like I will ask them, किया है, हाँ ठीक है, किया है, ग्रेट, नहीं किया है, ये एक ऑप्शन है, कर लेना. Boss, how much difference in his life it is going to make? Very honestly. Okay, so somebody who is doing tax saving hai, Aman, absolutely right. But how much? 15,000 rupees for him. You are creating one more additional paperwork for him for life to save 15,000 rupees. He may not even value it. So it really depends upon your client. It totally really depends upon your client. And there are honestly clients of mine to whom I do not even mention it. There are some clients of mine who are young executives, very at very high paying packages, to whom I do mention it because मुझे पता है उनका HR and all वो सब take care कर लेगा, all of that. I just have to suggest it to him and he will do it. Okay. Corpo model is giving more than that. What is corpo model? What do you mean by that? What short form is that for? Where are you, Aman? Can you unmute? Yeah, Aman.
ये मैम एक्चुअली जो कॉर्पोरेट मॉडल होता है मैम एनपीएस का, एक्चुअली ये आपको अप टू 7.5 लाख तक का टैक्स बेनिफिट देता है, पार्ट 80C of 1.5 lakh.
Your corporate has to be open enough to make that change into your entire thing, right? So which is again not a very feasible thing. Dekho, I'm not saying that recommending NPS to a client is wrong. All I'm saying is that if you are into wealth management, then the kind of clients you are dealing with, it's almost insignificant.
Okay.
I will give an example to highlight this.
Okay.
When a client comes to us says, this is my existing portfolio. Okay. A client comes and says, this is my existing portfolio. What should I do with it? In direct equity, without even seeing what is the name, I tell him, सर ये 70 स्टॉक है ना, ये 70 स्टॉक में से ये जो 40 स्टॉक में आपका लेस देन 1% होल्डिंग है ना, इन सबको बेच के निकल जाओ. आई डोंट इवन लुक एट द नेम, भले ही बीएससी क्यों ना हो उसमें, भले ही कोई बहुत बढ़िया बजाज फाइनेंस एंड ऑल क्यों ना हो उसमें. I mean, I'm not sure how good they are doing right now. I'm not a stock person, but still, what I mean to say is that irrelevant. Why? Why do I say that? अरे because the point is कि client का 3 करोड़ का पोर्टफोलियो है डायरेक्ट इक्विटी का, 70 स्टॉक पकड़ रखे हैं उसने. Now out of that all these छोटे stocks, one stock has 0.2% holding of the entire portfolio. Okay. Let's assume the stock became 3 times. What is the portfolio return impact? Portfolio level पे portfolio कितने से बढ़ा? So the logic there is, if you're that strong and bullish into that particular stock, go ahead and put in 3-4%. छोटा पैसा, ये 5-5, 10-10 हजार वो डाल करके वो इतना 3 करोड़ का अगर पोर्टफोलियो बनाया. I have to actually see now 2.7 crore portfolio having 380 stocks. Portfolio returns कभी नहीं बनेंगे उस क्लाइंट के. So first stage पे we did not even tell him to sell everything. We told him, sir, bottom वाले 200 बेच दो. Because we knew that if this is the mindset of the client, we will discuss this more in the behavioral session, in the behavioral finance session. That it's not important just to give the right advice. It's very important to give it in a manner that your client is able to absorb it, internalize it, and act upon it. Very important. You have to understand it. If I'm going to say this to the client, what is the client, how he's going to do it? So what I'm saying is NPS does not figure picture here much. PPF का नाम मेंशन किया है, हम रेकमेंड नहीं करते हैं कभी भी. वेल्थ में एनी वेल्थ आउटफिट would never tell a client कि सर आप PPF कर लो. It is really not a part of scheme of things. यहाँ in this particular slide, what you see is what actually gets recommended by a wealth organization. Okay, the products could be different. So for diversified equity, it could be via PMS, it could be via AIF. Okay, it could be via some advisory equity model. Real estate could be via direct real estate could be real estate based bonds, or it could be an AIF. So anything on those lines. Okay, that would be it. Okay, case and evaluation of customer context. So this is, let's say, something which the client gives to us, that मेरा यहाँ ये सब पैसा है उसका, and this is how we will sort of map it to, that if this is here, this is how much your money is, this is how your allocation is, and we will highlight it to him that you're staying in Mulund, that is your consumption asset, that is not your wealth builder capital which is there. So this is how the working happens, the practical application. Now each organization may not give it in this format. Like current organization also does not give it in this format. This is for all of you to understand that when the client shares the information, how you actually have to interpret it. Sorry, just a second. Oh, great. Fine. Now coming to the last section of our session here, asset allocation for wealth building capital. So that is the primary core focus for any particular wealth manager. The main concept that we keep is, first is the core portfolio, where majority of the money gets allocated. In core portfolio, you have a good visibility. Okay, let me not say good visibility, a good understanding of how those particular asset class behaviors have been. And accordingly, you know what to act upon. Of course, you don't know as much as to say in January last year, you should have withdrawn everything, and then in March, invested everything. So I don't mean obviously that. I really wish I had that. But yeah, so that's there. Then you have focused equity, which would come by way of, say, maybe private equity funds, focused mutual funds, or there are some PMSs which have a very tight portfolio of 10-12 stocks each. So those kind of things. Then you would have a domestic real estate, which will be there. And then you would have these art funds, which my professor had made me believe was all that wealth management was about. Hedge funds, gold ETFs, structured products. So these are all absolute return uncorrelated assets. So these all help in ensuring that if the main portfolio isn't doing very well, this particular portion of the portfolio would continue to generate some absolute returns, which means it would not be in negative at any given point of time. That is how the entire satellite, this particular satellite portfolio is made, constructed, and last of all, global opportunities. Indians collectively, Indian investors collectively are least invested into non-domestic equities. Across the world, any country, any developing country also, developing financial market country also has more money invested into outside domestic equities than India does. Okay, so why explore satellites? Why not do core? Okay, because there is a very low correlation with the particular portfolio. Okay, you know that you will have a minimum portfolio value. So see, point number one here, across a single market cap in US, large cap, if you put everything into large cap, then you have a ratio of 1. Okay, the correlation is 1 because obviously you have only single asset class. Then large and mid you have 0.84, mid and small you have 0.97, so on and so forth. Now across various markets, if you have everything invested into India, correlation is 1 because there is only one asset class which is there. If you spread it with Brazil or you spread it with Germany, you are reducing it by half. Then across asset classes through hedge funds and real estate, again, therein it depends upon the value of hedge funds because there is no collective indicator for that. Unlike the previous ones, you have a collective indicator. Here you don't have a collective indicator, but we saw that it is less than 0.5 and less than 0.4. So what we're saying is when you have invested across all of these, you will get a portfolio something like the green line rather than the red line. More stable is what the portfolio would be. Okay, you can also explore new asset classes. Real estate is of course for Indians not a new real estate class, but internationally in wealth management that's considered to be a new real estate new asset class. International investments are definitely new. LRS liberalized remittance scheme is the scheme through which you can go ahead and invest outside India. You have to be a bit proactive on it in terms of watching what is the limit to remit, because the limit to remit keeps changing every time. Okay, not that it keeps changing daily basis, but basically how much forex reserves we have defines it. So I remember sometime in 2013 was that. Okay, I'm not remembering the name very clearly, but very drastically in a single day they had reduced the limit from 200,000 to only 75,000. And then for 15 days it was there, but at that point of time Indian forex reserves were extremely low. So at that point of time, then art as a emerging asset class with great diversification value. How many of you think clients invest into something like art funds? HNI client, 20 crore plus portfolio guys. Yes, no. No views. Don't know. Anything? No idea. I wonder if in India such options are available. Mega, they're very much available. Okay, anyone else? Less awareness of AIFs. AIFs we will cover later on, Aman, in the next 2 sessions. Yes, they do, many of them. Okay, guys, my question पूछते फटाफट answer दो ना, मतलब these are not fact based. I'm just asking your opinion, so you can give that फटाफट से. Okay, done. ठीक है. Art investment does happen in India. There in fact used to be art funds also, pretty common at a point of time. I would say 2009 2010 we had a lot of them. Kopal Art Fund was one, which was one of the most famous reputed ones. Of course later on they ran into some problems and I don't think that exists as of today. Family office do, Akash says, absolutely right, Akash. So yes, the investments do happen in something as exotic as art funds, but then my experience has been it's primarily those clients who already are aware of art, they like art otherwise, and it's sort of the mindset is, you know, खरीदते हैं बड़ा तो बहुत अच्छा है, नहीं बड़ा तो भी चलता है. Art, lot of high value clients invest into. Art is one investment wherein lot of them invest into that, the high value ones. Through art fund also I did that. My group head had invested through Copal art fund, but I realized one thing, this is my absolute personal bias, that in art fund, what the fund house is actually betting on is they find a decent good painter, they find a good painter, a nice painter who is very aged, and they actually then sit like vultures to wait for the guy to die. I remember Coppola continuously sending these emails, you know, like mutual fund does these emails. They used to continuously send these emails. Raza's paintings are going to go up. Raza's paintings are going to go up. Once you go and you check Raza is 87 plus, having ailments. Because what happens with a painter is, till the time painter is there, good shape, hale and hearty, he will continue to make more paintings and there is more supply. The day unfortunately the painter passes away, now the supply is limited. Now the painter can't make any more paintings, he's no more, and then the prices start to skyrocketing because anybody who wanted his painting now knows that there are only like 219 pieces floating in the world. And before that you would not pay that much price because you would be like, let's see what he makes next, maybe I'm able to buy directly from him, no need to bid and all. So I really didn't really like the way this particular art bets on its returns. Among the more exotic one, I would say, I have looked at these diamond funds, evaluated diamond funds, not onboarded any of them. And I'm thankful I did not onboard any one of them. And what more? There have been film funds investing into films. Then more, what are the other exotic funds? Yeah, the most exotic product which I actually ended up onboarding ever was a wine fund. So it was by an Indian couple based out of France. They had taken care of the regulation and everything, all of that. Unfortunately, they launched it at a wrong time in India because markets would started really tanking badly and clients' risk-taking capabilities reduced a lot. So we had 3 clients invested whose monies we gave them back, but that was very interesting. So if any one of you finds it to their fancy, you can actually go ahead and check. Just like stocks, there actually exists a wine index. There is an exchange which is there, and therein it's like Bordeaux 1980, 12-year mature, trading at this price, kind of a thing. So we had actually verified this particular exchange, wine exchange also, the index also, mechanisms also, and everything. And yeah, I had a lot of clients asking me that at the end of the 4-year product, if I'm not happy with the returns, can you give me that much wine? The France, original French wine. So more and more clients were actually interested because the unit of the fund was in terms of crate, though the investments could be done in like multiples of crate. So a lot of clients said कि यार at the end अगर return अच्छा नहीं आया तो कम से कम उतनी wine दे देना. And we told them that can't happen, sir. The wines are stored in France with the exchange, so that's where they are stored. So that is what the most exotic of the products are there. I will just quickly check on time. Okay, we have to wrap this up in 10 minutes. So if there are any questions which I'm not able to take up or not get covered, just put them in the chat box. I will take them up first in the before the next session. Okay. So how mutual funds stack up, these we are going to do in the next one. So in detail. So I'm going to just do it this very quickly. So extent of diversification is on the bottom. On the vertical, you have management style, active versus passive. So say for example, Sensex ETF, if you invest, that is your leftmost bottom corner, the broad market index funds. Okay, something like that. SBI Focus Fund, that is your rightmost top corner, that is your focused opportunity funds. Okay, then you have this HSBC introducing climate fund. Okay, so that will be your active managed sector fund. Okay, so extent of diversification is very low. Focused equity extent of diversification is very low, but they are very active and are very actively managed. Yeah, I have a question. Passive. I don't know what that's related to. Okay, illustration 2, the core and satellite investment portfolio. So again, I have put these slides to show to you that if anything comes, how actually practically it gets allocated to a client. So let's say a client comes in with a lump sum investment of 50 lakh because he understands the client may have 5 crores. On day one, he's not going to give you 5 crores. So that client on day one would say, okay, let's start with this particular amount. And then depending upon the performance in portfolio, let's see how it goes. So lump sum 50 lakh, which is common. So core investments, structured products, capital protection, 20 lakh. HDFC growth funds, say 10 lakh. Satellite investments could be a pharma fund and reality fund, first tranche, 10 lakh. So it could be a reality fund wherein the tranches have to go to. Okay, now this is just ad hoc what I have put in. This is definitely going to take into account what does rest of the 90% of the client's portfolio is invested in. Baki 90% portfolio kahan invested hai? What are the missing loopholes? We would invest this 50 lakh into those missing loopholes. Okay, and in the bottom there is a systematic investment plan, which I would put that accordingly. So core investments में आपके regular funds आ गए, index funds आ गया, broad based funds आ गया. Satellite investments में it could be something like, this is a very old example I've written, Standard Chartered Premier Equity, which used to be a very highly rated mid gap mutual fund at a point of time, and equity investments. So both are high risk, high return kind of a strategy. Okay. Then here, core and satellite approach to global investing. Okay, so in India you have stocks, mutual funds and everything. Then in US, let's say if you have a job in US and you have an ESOP there, so that is something which is then again being taken care of by that. This is just to show you an example that many people skip out, ignore the portfolio value they hold via ESOPs. They should be paying attention to it because that's the most concentrated portfolio holding that they have. So then we would recommend that take exposure to the other 5 main economies instead of US, because US you already have a job and an ESOP there, and then China, Brazil, Taiwan, UK, Sweden is what you should have it. Why ETFs? Why not active management funds there? Anyone? क्यों मैं ETF बोल रही हूँ वहां के लिए? मैं क्यों जैसे इंडिया के लिए एक्टिव मैनेजमेंट फंड्स है वो नहीं बात कर रही? लो कॉस्ट, लोअर एक्सपेंस, करेंसी फ्लक्चुएशन तो दोनों में होएगा, ETF में हो या एक्टिव पैसिव एक्टिव दोनों में होएगा. Okay, so it's short of time, I will give you the answer directly. It is to make your job more simpler, and make it more stable for the client. See how much research it takes to identify out of the hundreds of open-ended equity mutual funds to say these are the 6 mutual funds which should be in your client's portfolio. Now imagine doing it for a third country, and now imagine doing it for 5 different countries. Too much work. कर लेंगे, high value client के लिए हम कर लेंगे. We might say it's not the work which hampers us, but are you in a position to actually hire 5 different specialists? Because actually that is what you will require, which is not really feasible, possible to have that resource जो ताइवान ही ट्रैक करता है और फिर आपको ताइवान का ओपन एंडेड एक्टिवली मैनेज फंड देगा. Hence the reason that we portray and put forward the ETFs as the best option. Yeah, Diane? Oh, acha. Yeah, Diane.
Yeah. So when you say Taiwan ETF, are you talking about like how our Nifty ETF is or something?
Exactly. Yeah. So what I mean is basically the flagship index that they have, there would be ETF running on it. So you have an exposure onto the Taiwan, and the index, when well constructed, ideally is supposed to reflect how that particular overall market return is. Okay. Sure. So that brings us to this last slide that we have. Okay. And unlike what people think, the asset allocation is not a linear process. Okay, asset allocation is not a linear process. What do I mean by that is, let me see. If I click on this, I will just take this out. Okay, yeah, now it is here. Okay, so look at this slide with me for next 2 minutes. On the leftmost axis, if your risk level is 0, I am suggesting that liquid debt is the only thing that you can expect. You should get into. If the risk level is 0, okay. Now let us look at the other extreme. If your risk level is 100, then focused equity should be the only thing. These two are clear? These two are simple to understand and clear. Okay, if risk is 0, then only liquid debt, and if risk is 100, then only focused equity. Now the game lies in between. Okay, what happens is, आप जब यहाँ से 15 पे आते हैं, तो what we say, आप थोड़ा सा डाइवर्सिफाइड इक्विटी ले सकते हो. अब उससे कम, look at this line here, sorry, 1 second, ये only ये वाला line select नहीं हो रहा है. I'm not able to select only that dotted line, but okay, bear with me here. If I put this line here on 15 for you to see, then we say थोड़ा real estate, sorry, थोड़ा सा आपका long term debt, okay, थोड़ा long term debt जाएगा, थोड़ा real estate जाएगा, and some gold जाएगा. Okay, here अगर आपका risk level जो है वो 85 पे है, तो then see, we are saying up right from somewhere around 77, we are saying you don't need gold. आप इतने risk level के हो, you don't need gold. So you see, we eliminated this particular asset class. From somewhere around 65, approximately 65, 67, we eliminated liquid debt. We said you don't need it. आपको नहीं चाहिए liquid debt. Okay, and then after that, this is how your diversified equity is growing. Now see, as your risk profile is increasing, the diversified equity is growing, but we are saying कि boss, अगर इतना ही risk लेना है आपको, risk level appetite है आपके पास, so instead of diversified equity, maybe only focused equity makes sense, and that is why there is that sharp decline. Okay, usually you always find these tables in a very neat cutout, tables. Low risk है, equity minimum है, ये इतना है, ये इतना है, इतना है. But in reality, when you go out and you actually start setting a client's portfolio, it is not the neat compartmentalized tables, but it is somewhere something in between, more complex like this. And with that, I close my today's session. I had two raised hands. Diane, I think your hand is raised from the previous question only. Okay, Manoranjan, you can unmute and ask the final question for today. And the PPT will be provided to all of you, I think, by Monday. So you can go through the PPTs at that point of time. Yeah, Manoranjan, बोलिए. मैं unmute करती हूँ आपको.
Hello.
जी.
Yeah, good afternoon, ma'am.
Good
So
afternoon.
first of all, thank you for starting the session on this Teachers' Day. Okay, so it's a great occasion and we are starting the session on the Teachers' Day. So I have two questions basically. The first thing is regarding the index fund. Okay, so when we see the regarding the index fund, and then the second question will be regarding this debt fund. So if you see the index fund right now, and if you see the active funds, going through one article in Economic Times that around
Manoranjan,
70.
sorry to interrupt here. From 2 o'clock, there is another session, Aditya told me, which is going to go to. And because your question is not on asset class, but at the product level, my request is, please do note down the questions. The next weekend, both the sessions that we are going to do are on asset classes and product. So if your question, I'm just guessing your question is more on index funds rather than the asset class category. Index funds hona chahiye, nahi hona chahiye, how they are performing. Okay. And then second question on debt. What is the question on debt that you have?
The debt, my question is that, if you see earlier, debt fund was considered safe. But considering the scenario which we are going right now and which has happened from the last 2-3 years, even debt fund has become more riskier. And at this point of time, when the ratings are getting changed overnight, if someone is a AAA plus or AA minus, it gets changed overnight. Okay, so we are feeling that equity is far more safer than the debt at this point of time. If the debt,
again, this is exactly what we are meant to discuss in the coming week. And you can note down the question. If it does not get answered, please ask me. But I think in the next 2 sessions it will get answered. The debt wala thing. Here today, I would like to say this: long-term debt mutual funds were never 100% safe. It was lack of knowledge and ignorance because of which it was perceived like that. So unme kuch change nahi hua hai. They were always like that. It's just that industry never spoke about it, never trained people, never discussed these things. So that was the only problem there. And index funds may you have, what is the article that you have read in just a quick summary?
Yeah, I read that around 70% of the index funds are now doing better than the actively managed funds.
Okay, correct. Okay, that's a right fact. So why should people not move to index funds right now? Okay, why should people continue to pay expense ratios and continue with active funds is something we will discuss in the coming 2 sessions.
Sure, ma'am. Thanks for the session, ma'am.
Thank you so much, everyone, and looking forward to see all of you. First session was planned for later in the day because of the travel schedule. Going forward, all sessions will happen on time from 10 to 12. Thank you so much. Have a great time. Thank you, Nitin.